How important do you think it is for Lyft to get out ahead of Uber, considering that even though we talk about them in the same sentence, they are very different businesses? To me, at least, Lyft looks like the equivalent of the pure play, if you will, on just straight driving, while Uber has gone into all sorts of other businesses, including what seems like a very profitable one in Uber Eats.
Right. So one, glad to be here, Andrew. And I would say that it's important to recognize as a public company, you're facing an endless series of quarters. You have to produce quarter after quarter, year after year. So the fact that one gets out a little sooner than the other, I don't think it's meaningful in the fullness of time.
But in terms of the way you think investors look at these kinds of companies, the kinds of multiples they apply to them, you know, if Uber had gone first, do you think it would have changed anything for a Lyft?
No, I think investors are shrewd enough to look at each as a autonomous unit, no pun intended there, and value it based upon their particular set of dynamics at that particular point in time.
Do you have a view?
Have to do this across.
Do you have a view that all of these companies, these unicorns, are overvalued? I mean, that's the talk of Silicon Valley. It's the talk of Wall Street right now.
Well, I would say that the public markets will give them a true value, right? Private markets represent bilateral deals between parties, and those bilateral deals commonly have more structured instruments between themselves, which do not directly equate to the value you have of common stock trading in a public market. So coming public will reveal the true value of these entities.
Right. Hey, Bob, I don't know if you've focused on this, but recently the SEC has proposed a new rule, which effectively they're trying to get more companies to go public, and would effectively allow some of those companies to talk to private investors privately before they made a decision. Do you think that's a good rule? Would that be a good outcome?
Well, I wouldn't call it a good rule. I think it's a great rule. And one, we have the data to support it. If you remember back in 2012, they passed the Jobs Act, and that allowed smaller companies to go talk to investors. So we have the data points to say what happened as a result of that. So right after the Jobs Act passed, we saw IPOs go up by 2 to 3-fold, and most importantly, we saw the biotech industry come to life. Before the Jobs Act was passed, biotechs were not coming public. They assumed the negative. They assumed the public market did not want to bet on their uncertain future. The fact they were able to talk to investors ahead of time, they got positive news, they came public, and you look at all the immunotherapies that are out there today curing cancer, that's a direct result of the policy of the Jobs Act. So now to bring that forward to more companies, to the larger companies, I think is a wonderful thing. I applaud the SEC for making this move.
Bob, when we take a look at the Lyfts and the Ubers of the world, you know, this really underscores what we've seen recently, and that is companies waiting to go public for longer. These are companies that have existed, that have operated, et cetera. They have a track record. And there could be an argument made that because they're going public later in their lifespan, that the public, when they do participate in IPOs, they're not benefiting from the upside. Could that proposal help crack that at all? Or is this just a natural evolution of the markets and that's the way it goes?
So I believe the new regulation will encourage companies to go public sooner. And I think that's generally a good thing because I said before, you'll get to true valuation. But the fact companies come public later in their life cycle doesn't mean there's not upside. And each investor has to do their own careful analysis on each unique situation. But clearly you have the asymmetrical growth in the beginning, but that does not mean there will not be incremental growth over a long period of time.
Hey, Bob, final question, maybe a curveball, but I always think of you as a tech pioneer, but you also care about securities laws and disclosure laws. We had a huge conversation on this show yesterday about Elon Musk and his recent set of tweeting and Twitter as a vehicle for dissemination of news. Where do you stand on that?
Well, one, I think Elon has to recognize, again, that he's the CEO of a public company, and what he says will move markets, and he's not an individual citizen. So I think we need, further maturity on that regard. I certainly think Twitter is a very effective communication mechanism, but it has to be used properly and in the right context. So we want Twitter to exist, but we want it to exist in the proper format of use.